I spent some time today studying Bitcoin and comparing its behavior to the S&P and Nasdaq when interest rates were cut. There's not a lot of data to go off of with Bitcoin. We only have 2019 as a real reference point, and I'm not going to try to make conclusions off of one data point. So I want to share with you some of what I found, and I will warn you that if you are extremely bullish right now on the end of quarter four going into next year, like I was before doing this research, you may want to brace yourself for what I'm about to tell you because there's some concerning data that I'm seeing based on what's happened in the past with the Nasdaq and the S&P. And it does make me wonder, is Bitcoin an exception? Is it going to go counter to what has happened in the past with other asset classes, or are we not the exception and we're going to follow exactly what's happened in the past when the Federal Reserve has cut rates? So this is a very important video for you to watch if you're heavily invested in the market, or even if you're not and you have money sitting on the sidelines. I do think about, one of the things that really got my attention several days ago, it seems like maybe about a week ago now, was when Warren Buffett cashed out half of his Apple stock. It made me kind of think, this guy is a trader who's obviously a lot smarter than I am and smarter than most of the market, and somebody who has a track record of knowing what he's doing. It got my attention. And so I want to take you through some of my thought processes and look at, what's Bitcoin likely to do when rate cuts happen? And is it likely to be bullish for crypto or bearish? And I think we have no choice but to look back at the Nasdaq, which is the closest cousin to Bitcoin that the stock market has, and also look at the S&P and see how has that market behaved in the past when rate cuts happened? What did the market do? What happened? And I think if we look at things that way, we can get a more clear idea of what's likely to happen and how this cycle might actually be very different than the last ones. And our closest relative might be the March 2020, or I'm sorry, the 2019, 2020, area, right, to what we might be heading into. And it is very humbling. I am heavily invested in the market, so I'm a little concerned with this too. And so, without further ado, this is crypto simulation theory. I'm the Gaussian snake. Nothing in here is financial advice about what you should do. You should make up your own mind. And please make sure to like and subscribe to this video if you want to catch more content like this. Join my Snakebit Telegram, link in the video description below. If you want more daily updates and chart analyses and a community of crypto investors just like you. So let's go ahead and get started and take a look at a bunch of data that I looked at. All right, so I want to just kind of first start out with Bitcoin on the weekly time frame. This is the time frame we're going to be using for our stock market analysis as well. And what this whole video is going to analyze is how Bitcoin has behaved in the past with regards to rate cuts, which we only have one instance to compare to. Then we're going to jump back to the Nasdaq and the S&P just to get as much history and data as we possibly can, because we don't want to think, oh, it's a presidential election year, therefore we must pump into the end of the year. No, we don't have to. In fact, there's a case where this didn't happen, and that was during Obama's election in 2008. So, and there may have been other instances as well. I can't think of off the top of my head. I know when Richard Nixon was elected president in 1968, that was not a very good. The market didn't do very well afterwards. It actually tanked. So, and they headed into a recession. So I think it's important for us to consider the bear case, and this especially considering I just did a video that was very bullish, right? So this will be kind of the counterpoint to that video, and you can decide how you want to position yourself, and if you agree or disagree with me. I'm going to try to be a little bit more concise in this video and not take 40 minutes to go through the analysis. I think I can do it in less time. But anyways, you can see where we are right now. We've been frozen at 5.5 roughly interest rate for quite a while. The market has not been enjoying this. It has been kind of dumping out. And so the video I did before was a triple top, right? We were talking about the lost cycle. So I think like this is going to kind of analyze not something I would really call a lost cycle, but a delayed cycle. Okay. So that's kind of what would happen. Now, if we go back to 2019, okay, so this is the only data point we truly have. You can see right here, okay, the market had elevated interest rates. Um, of around 2%, the interest rates did start getting cut, right? And notice what happened. Okay, the market was elevated, right? Like interest rates were elevated, and during that time, the market actually rallied in a way that's actually not that dissimilar. Like if you just look at the fractal right here, let me grab that fractal. So I think it's bars pattern, yeah. And so we're gonna go ahead and just grab this fractal. Maybe I'll grab it all the way to here. Okay. Let's take this over to present day and see just how similar the 2019 rally and our current rally have been since the market has been flat rate, right? Look at that. I mean, they look so similar, right? So similar, that 2019 pattern. Okay. So let's go back to 2019 though and see what happened. So when the market was flatlined, market shot up right after this bear market finished. And then what happened is interest rates were lowering, the market fell. And when interest rates finally reached their floor, which was basically 0%, the market bottomed out. And it bottomed out at a slightly higher low than happened during the bear market. Okay. Something else I wanted to show you too is that if we look at the Bitcoin risk model, and I'll just go ahead and like turn off the federal funds rate. When the 2019 pump happened, we were sitting in, if we call this zone one, zone two, zone three, four, and five, we were sitting in zone three. And we went all the way from zone three back down to even lower than we went in the bear market. Look down here, we made it to zone one. We actually made it to like lower in zone one. Okay. Now you could say, well, the bear market had just happened, and then we had an echo bubble, and of course we needed to retest these lows. I can't really argue with you on that because the timing certainly is different than what we're facing now. But is it that different? Could this just be a stretched out version of what happened in 2019? Could we actually be in a situation where Bitcoin is about to go down below $35,000 or something like that, and shock us all by actually going lower than it went in 2022 and going below the blue line? Not because of a pandemic, not because of anything like that, but just because are we about to head into a recession? Now, why am I talking like this so bearishly? Well, I feel this is an important case to consider. It's one that I honestly have been kind of not considering. I keep thinking the recession is not going to happen because everybody's looking for it. But we have some things that we need to look at. Um, Down here we have the SOM rule, the current SOM rule. It went above zero point 0.5, which is one of the recession indicators. Okay. Um, U.S. recession probabilities have increased a little bit. This is a little hard to see. I'm actually going to turn that off because I don't even think this is the right indicator. I grabbed the wrong one, but nonetheless, we have the SOM rule, right? So this presents an interesting case, definitely a bear case. Okay. But there is some light at the end of the tunnel, even if this ends up. Actually, no, I want to keep the SOM rule on there for future analysis. Okay, so what I want to do now is I want to go and, we only have one data point with Bitcoin, right? I want to go look at the NASDAQ, and there's a little more history there that we can analyze the NASDAQ against interest rates. So let's go ahead and do that. Okay, I'm going to keep this really simple. I have the SOM rule down below, which has perfectly predicted every single recession, and could predict this one too. And then we have up above the NASDAQ, along with the interest rates overlaid. Okay, you can see we're still flatlined at 5.5 roughly. And we don't know what happens next because we don't have a crystal ball. But if we go back to 2019, 2020, that was brutal for the NASDAQ. And look, we had a recession. NASDAQ didn't like it. Bitcoin didn't like it. And as the Fed cut rates initially from up here, the NASDAQ did rally. This was July of 2019. NASDAQ was rallying and rallying until it didn't in February 2020. Okay. So there was a period of rallying. It actually outperformed Bitcoin during that time. Okay. So just because the NASDAQ rallies doesn't mean that, Bitcoin's going to rally. So we have to go really far back, you know, in history to find a case where the Somme rule triggered and predicted a recession, right? Somme rule triggered. When did we hit point 0.5? In fact, I'm going to go ahead and draw a horizontal line at point 0.5. I'm going to edit it to be exactly point 0.5 because that is where her rule technically triggers. Okay, we're going to do exactly point 0.5 and see kind of what happened after that point. Let's put on the crosshairs. Okay, so it's about to get pretty serious, guys. Like, I'm not saying this because I want it to be true. I'm saying this because this is what's happened. You can see what was happening last time. Well, we were kind of coming to the end of interest rate cuts in December 2007 at best until we got closer to interest rates being cut later on in the year. And when they reached their floor, the NASDAQ put in a double bottom in 2009 before it started a long-term bull run. That was the GFC, the Great Financial Crisis. Okay. That was the last time the Somme rule triggered prior to 2020, right? Interest rates were high up here in 2006 for quite a while, close to where they are now, actually. And then the Fed started cutting, and initially the NASDAQ rallied, right? It rallied from the first cut in June of 2007 to about November 2007, and that marked the high. It was just 5 months from the cut. Like, if that were to, let's say Bitcoin were to exactly follow this, let's just pretend that, let's say we get a first cut in September, that means the bull run for Bitcoin could be over in Q1 of 2025 if it were to follow something like this, if Bitcoin pumps into rate cuts, which we don't know if it will. It didn't in 2019. Okay. Let's go back even further to .com. Okay, so here's the Somme rule triggering, 0.5. The market didn't like it. Now you can see the interest rates. Let me see how I want to do this. Well, yeah, I'll just bring them down. All right. So we had the interest rates pretty elevated, like 6.5, and the market was rallying into this. But as soon as the cuts happened, we were already in a recession. And the Somme rule didn't even trigger until we were well into a recession. Look at all that carnage. I mean, the recession was like halfway over, and it was about another year and a half or so before the market found a bottom from the time the Somme rule triggered. May of 2001 to the Somme rule going below October 2000, to about a year and a half of this bear market. I mean, more than that, if you count this is the start of the bear market, which I would, but the worst of it, right? You had over a year of that. So this was really nasty. And the market didn't start rallying again until interest rates were around 2%, which I think a lot of people feel is like a healthy level. Okay. So we go back further. You can see, I don't know if there's, we can maybe track the Gulf War recession right here. This was the Gulf War recession, 1991. Somme rule triggered in 1990. Market was starting to go down. Okay, what about interest rates? Now, the interest rates were quite high during this time. You can see interest rates were around 80. This is February of 89. Interest rates were elevated around 10%. The Fed started cutting. Market actually rallied into those cuts. Well, not right away. There was a little bit of a dump, but there was a nice rally, right? The rally lasted all the way from the first cut in April of 1989 until July of 1990. So it was like about a year of this nice little bull market. Okay. And then we had a bear market, a very steep bear market, only lasted 6 months. These rate cuts were very gradual, did not get us down to like a super low level or anything like that. So that is a point of encouragement. It certainly is. And then we kind of run out of history. So this is where I'm going to have to bring up the S&P. Okay, so I'm not going to review the data with the S&P that, I also had with the Nasdaq. It's pretty much the same thing happened with the S&P that happened to the Nasdaq. A time in the S&P's history that maybe is a little bit similar in some ways to what might happen with Bitcoin is the early 80s. So if you go to February, January of 1980, you'll see that interest rates were climbing and they got to this elevated level. I say somewhat similar because I'm not really sure how similar this actually is, but certainly a scenario like this could play out. Something like this could happen. The SOM rule was triggered around January, February of 1980. And note that the market had not quite fallen into a recession yet, but then we did get this first recession. And after the recession, rate cuts happened, and it was very bullish. So interest rates were brought down from like almost 18% down to about 8.94%. But then inflation returned, and interest rates were up all the way to like close to 20%. Okay. The S&P was going sideways during this time. There were rate cuts. S&P didn't seem to care, and it just slowly bled. Like it was just a real slow bleed as rates started falling in a more material way, and finally, got some stability. And the market really didn't start to rally in a big way. This was like, and look at how the SOM roll was triggered twice, not once but twice. This was like just a years of sideways. And, and then the market finally started to go into a bull run as rates started to come down in a more sustainable way. You know, it's just all about following the money. Is money flowing into the market or is it not flowing into the market? People like to people like to play around when things are at lows, not necessarily while they're on their way down. Okay. So that's something to keep in mind here is that this was a fairly mild recession. It was like a double recession or maybe just like a double bottom. The SOM roll was triggered twice and then things kind of improved from there. All right. Now, the 1970s were just a really just devastating time for the market in general. You can see this is sort of at there was just a series of recessions. Like there was actually, sorry about that. I don't know why my video keeps kind of phasing in and out. I apologize. Um, but yeah, if you go back to 1966, this was not a recession. This was a soft landing, in a way. Okay, but the rate was around 5 point something, similar to what we have now in the Fed cut, and we didn't get a recession. We just didn't. But unfortunately, they cut too soon, and they had to start raising rates, and they raised it, something broke, they cut, too late, right? Market went into a recession. And this pattern just went on like all decade long. They got to like freaking 13% in July of 74. Um, Market was actually, pumping initially because there was whenever the market perceives like, oh, interest rates are low, there's stability, they start, buying assets, risk assets. At the time, the S&P, would be considered risk assets because you didn't have crypto. And, yeah, market was just dumping. They tried cutting, it didn't work. Market bottomed in a nasty recession. So this was just a horrible decade for the Fed. Horrible decade. And you go back to even further than this, and you see um, that when SOM roll is triggered, right? There wasn't a recession right away here. In fact, market was going up just in the 50s, and this is where the data begins. It was only on the cut of rates, like around that time, market started going down. Okay, SOM roll triggered here in think September of 1957. I mean, market had already been bleeding, right? And interest rates went down, they came back up again, and of course, the rates were, let's exaggerate this a little bit. Okay, so you can see rates were kind of high here in the late 50s. Um, Market was kind of going sideways, and rates were cut, and as the rates were cut, the market kind of bled down a little bit. Okay, went on a rally when they were low, and then had a dump. You can see the SOM roll was triggered, and every single time it foretold of a coming recession, even if it was a slightly small recession that just took place. I don't even know if this would technically be a recession, right? But a dump in the market. So, um, but yeah, the SOM rule has never failed to predict a recession, um, and so we've triggered it again. And the question is, will it fail this time? Okay. I don't have, you know, data going back any further than here, unfortunately. So, you know, what can we conclude based on this study? Okay. Well, what we can conclude is that rate cuts for the Nasdaq and for the S&P, going back before we were able to track them against the Nasdaq, or before the Nasdaq even existed, um, have generally not been met with a bullish response from the markets until the market felt like we had bottomed out. And it was only on that bottoming that sometimes corresponded to that process of the cutting of rates corresponded to a recession. Sometimes it did. Um, Sometimes a recession came later, but there always was a recession. So yeah, I mean, a majority of the time, the market did kind of dump into a recession not that long after the rate cuts materialized. And it wasn't until, like I said, they reached a floor that the markets bounced. So, what would something like this look like for Bitcoin if Bitcoin follows the path that it followed before in 2019, or follows what's happened the majority of the time with the NASDAQ and the stock market? What would that look like? So, I'm going to pull up some data to try to give you an idea of what that might look like. So this is the CME Fed Watch tool indicating what the market thinks the Fed's going to do. And you can see that, 100% of participants think a rate cut's coming, and that this first rate cut's going to be fairly aggressive at around 50 basis points. Things in the market are not good if they're projecting that large of a cut. The cuts only happen because something is breaking or something's broken. Then they project another 25 basis point cut in November, followed by another in December, another in January, March, and then they think that, we're going to find some kind of floor in April to June or July of 2025, and we don't have data going out past this. But that we're going to get down to about 325 to 350 basis points. Now, I don't think the Fed is going to cut rates to zero. I don't think that's going to happen. The question is, what happens as they cut rates to the economy? We know that US consumer credit is maxed out. We know that there's a lot of things in the economy right now that don't look good. So, what reason do we have to believe that Bitcoin's about to get super bullish? So I guess the argument is, well, more liquidity. And that certainly has been the case, that when more liquidity is flowing into the system, Bitcoin's price action and crypto's price action in general is a function of excess liquidity. That's a little bit hard to argue that. But let's just suppose that the market reached some kind of floor in the summer of 2025 with regards to interest rates, and that marked some kind of bottom for interest rates. Or maybe let's just say that it even went further than that. But just for argument's sake, we don't have data past that. So let's just say July of 2025 is the floor for interest rates, and we're going to get down to, 3 let's just say 325 basis points. So, what might we expect to happen from Bitcoin during that time, in the case that it kind of tracks what the Nasdaq and the S&P have done in similar environments? Okay, we have to get a little bit creative here. And we only have one point of reference, right, for an interest rate drop, but that last interest rate drop was to zero from some place much lower than where we are now. But if we go back to 2019, and look at what happened on the first rate cut in July, it wasn't really a good thing for crypto, right? Crypto just bled, and if I take this bar pattern and I go ahead and merge it into the current day, right, where we are now, I could just hit copy and paste, but whatever. This is more or less what you're looking at is a less volatile version of this, right? Playing out to maybe July, something like that. Okay, but let's make it less volatile. Sorry, having my usual issues with TradingView. There we go. You know, this could get nasty. Okay, this is, I don't know why it's not letting me move this now. Okay, can't move it. There we go. Move it. I don't know. It's kind of hard to say exactly how this would, where we would stop, right? But around $30 to $35,000, because when I look at the Bitcoin risk model, I pulled it up earlier. Zero risk was around 30 something thousand. It'd be around that 30,000 range. And interestingly enough, this actually corresponds to the breakout region right here, which we never came back to retest. So if you were to draw a rectangle in our breakout region right in here, which now I'm going to color red, it's entirely possible, you know, maybe we touch that region and test that, and then the bull market takes off. This could correspond to a recession that we're already in. I mean, the Somme rule says, and that would be a fairly short recession, but what if it's like the 1980s one? I don't know why this just moved up. Right? What if we do something like this? This would catch everybody off guard, freak everyone out, make them think we're going into a bear market when, in terms of technical analysis, we're actually forming a macro high or low, like on a much, much larger time frame. And then what if after that happened? Okay, let's again, I'm not trying to freak you guys out here. I'm just considering a theory. And I don't know what's gonna happen. Nobody does. But it would be foolish not to at least consider this. So I'm looking for my drawing tool. I think, yeah, we'll just do a simple arrow. But what if this right here, and let's say around this time next year, represents the actual start of the bull market and Bitcoin going absolutely crazy? Let me bring this scale down. And let's say interest rates are stabilized and we actually have our bull market go not into late 2025, but into late 2026. No, we're not going to go that high. Let's say something like that, right? Is that really unbelievable? This would actually turn this whole thing into a giant bull flag that spanned all the way from December of 2020 to July of 2025, like a 5 year long bull flag. I mean, who knows? Maybe we can even go to 300,000, like if it's in deep into 2026 or heading into 2027. Maybe this is the point at which Bitcoin starts to act more like the stock market. And it fools like, let's see what would happen if we started our, let's say we started this that we're actually in a bear market, not a bull market. And let's say that started in March of 2024 and it ended in July or August of 2025. That's a year and a half long bear market, which is a long bear market for Bitcoin. And let's say that's the recession. And then the recession's over and we start a new bull cycle. Okay. I do not know what, oh, I think it's because I have two scales on here. Okay. So these are the interest rates, right? The interest rates are going down, they stabilize, and Bitcoin does what the stock market's done before. Well, this is going to make the next, sorry, my light just ran out of batteries. So, um, but yeah, this would absolutely make crypto so difficult to navigate because you wouldn't know up from down, and it would be very bothersome that what happened to the bull market? It's like, what happened to it? And all that happened is we just had a recovery, and now we're coming back to test structure. But we're testing structure at the breakout point almost 2 years later. That's absolutely insane to even like consider that, but that's a possibility. And this is based off data from the S&P and the Nasdaq. So I guess what I'll say at this point is, what do you think? What do you think is going to happen? Do you think this theory I laid out is possible, or do you think this is BS? Let me know. You can let me know in the comments. I want to hear your thoughts because this is concerning to me. I'm heavily, heavily exposed in the market. And if we're like not even halfway through a bear market that we're in right now, we don't even know that we're in, um, or we're in a recession and we don't even know it because the SOM roll is already triggered and it's about to be over a year and a half from now, or about a year from now, I should say, a year and a half from March. What do you think? So let me know in the Telegram group. This would be an absolutely brutal thing to go through. So I think, how do you prepare for it? Well, make sure that you're stacking some cash on the side. Have your crypto position just in case a theory like this is wrong and we do get a nice rally. You want to take advantage of that rally. But if for some reason this theory is correct, you're going to want to have cash on the side. You're going to want to build a cash position to take advantage of what could be a major capitulation sometime in 2025 instead of a blow off top, an actual capitulation candle that comes back and tests structure for the next leg of the bull market. And that leg of the bull market lasts a year, and then crypto becomes like the stock market and no longer is subject to the whims of these, you know, See, I started off my channel talking about cycle theory and how I don't believe in it. So this would completely break structure with the 4-year cycle. I'm just very curious to hear your thoughts. I want to get some discussion going on it. Let me know in the comments if you think I'm insane and this is total, BS, or if you think there's something to it. Better way to get a hold of me, in addition to YouTube comments, is go to my Telegram group, the Snake Pit. Go ahead and join that and join in on the discussion because I want to know what you think. I laid out a bull case. This would, by the way, let me talk about my previous video, which was a lost cycle. Would this represent a lost cycle? Technically, no. You would think you have a triple top, only to find out that it actually wasn't a triple top, but it was a giant bull flag. I think something like this could happen. It's happened before with the stock market. Why couldn't it happen now with crypto? Okay, this is not financial advice. You shouldn't necessarily act on what I'm saying because I'm not a financial advisor, nor am I an oracle. But yeah, so again, I'm the Gaussian Snake. This is Crypto Simulation Theory. Love to see you in my Telegram. Please give this video a thumbs up if you want to see more videos like this, and be sure to subscribe to my channel as well, and hit the notification button to be notified of more future releases. Okay. Otherwise, I'll see you around. Till next time. Be well. Bye.